And with us, Udayan Mukherjee, our global business editor, to take us through some of these key developments this time around. Udayan, the budget being called from under-promising to and ready for over-delivering to guarded to, of course, having excluded a lot of mentions with regards to any play with taxes or for the common people. There are all kinds of views and opinions that are, of course, coming in.
Thank you, Abha. There's a lot to talk about really over the next couple of hours because we've had some time to study the budget now and we have some sense of the fine print, and the devil is always in the detail with the budget. So we've got Deepak Parekh, Chairman of HDFC, also joining in now. Deepak, thank you very much for joining in. I want to start by asking you of what you've made of these Capex proposals and all this debate which has been happening since morning about the government's thrust on infrastructure investment versus stimulating consumption, addressing the supply side versus the demand side, which a lot of people thought the emphasis would lie in. How have you taken it?
No, I think the spend on roads and railways and logistics and infrastructure of 7.5 crores is a very good suggestion because we want investment to happen. And as you know, the private sector is delaying investment because the capacity utilization has not reached the level that it should reach. So government spending has to be done. And this will really boost the economy because it's employment generation and number of raw materials like steel, cement, building materials, and lots of others are used in construction. So I think it's a good. My only concern is we must ensure that implementation and execution is the key now. Do we have the wherewithal to execute these projects? And we have to be careful because there are very few contractors who have the capacity to build this much. You know, most of the contractors who were there 10 years ago have sort of disappeared or are struggling in their present position. So we need 5 Larsen and Toubros. Right. We don't have 5 Larsen and Toubros. We have 1 Larsen and Toubro. So we have to ensure that execution should not be the weakness. I think the resources will be there. The intention of the government is extremely good, and it will be employment generation. Now, the other point you made is very true. Most FMCG companies and consumer-related companies are saying that the household demand has slowed down. And household demand can only increase if you give more money to them, if they have more spending money, for which they have to do something regarding ATC or tax slabs, which they have not done. But my logic here, Udayan, is that, you know, if it ain't leaking, don't change it. The proof of the pudding is that the government gross tax revenues have gone up by 50% in the first 8 months. And this includes corporate tax, this includes income tax and central GST. So the tax rates are reasonably low and the government is getting increased compliance and increase in revenue. So why do some minor changes here and there? I was only hoping and a little disappointed that ATC, which is a deduction for savings, pension, insurance, and interest on housing loans, that limit has not changed for years. I think 6-7 years. While house prices have gone up, the compulsion to save has gone up with the health issues. Health insurance has become a necessity. So I think there I was a bit disappointed that they did not increase the ATC limit. But otherwise, I think overall, given the constraints she was working on, about third consecutive year of the budget where we had the impact of COVID-19, interest rates are going up globally, the loosening credit policy, the loosening monetary policy is behind us, yields are rising, and number of commodity markets are all-time high. Crude has gone up to $90. So these are constraints of the government, of the finance minister. So in a way, her hands are tied. Despite that, I think she did a very credible job trying to push infrastructure and trying to push capital spending.
Well, let me ask you then about this point that you've raised right now about her fiscal management. Because, you know, this year it was pegged at 6.8, it has come in at 6.9, and next year she's at 6.4. But this on the backdrop of very bountiful tax revenues. I mean, we're 17.5% nominal GDP growth, net tax collections running way ahead of earlier estimates. And the government gross borrowing program for next year is a very, very large number, which has sent the bond deals skyrocketing today. I mean, at HDFC, you follow bond deals very closely. Are you a little cagey or cautious about the bond market's reaction, and whether the government should or could have done more on the fiscal deficit front in getting back on the path of prudence?
You see, these are exceptional years because of the pandemic. All over the world, most countries have got this massive fiscal deficits, and you have to be accommodative in these circumstances. And so, with a 9.2% GDP growth rate and an 8.5% for next year, I think we can stomach a 6.4% fiscal deficit. And if we had no growth, then it would be disaster. But since the growth is there, I think it's manageable, and very little choice the FM had to do anything more about it.
What is the way forward with interest rates this year, Deepak? I mean, how do you see it? Because you know that in the US, interest rates are going up. Here, bond deals have hardened today, and it looks like inflation is beginning to look like a bigger problem than it seemed at first. Is this a year where we'll struggle on the monetary policy front, you think?
No, I think inflation is entrenched, which impacts the common man. The CPI inflation number is 5.6 or 5.4%. And yes, this will be a year when global interest rates will go up. And even the Fed has said, someone has said the Fed will increase rates 5 times this year. So we will have to increase lending rates. We will have to increase deposit rates. And I don't think it's going to go significantly out of hand, but maybe 1% here or 1% there. By the end of the year, you will see. Not significantly high. We've seen interest rates of 13, 14%. We are not talking about these rates. We are talking of maybe 0.5% higher this year.
Okay. Since you follow all these issues very closely, let me ask you about the digital rupee as well. What did you make of that announcement, and what shape and form do you see it taking, Deepak?
Yeah, I would say that I was surprised to hear that announcement. You know, Finance Minister's budget had a lot of technology and digitization in the state governments, in PSU, and pushing that. And so it was an extension of that let's talk of a digital currency. And I think we'll have to wait for the Reserve Bank, how they manage to do it and what their plans are. I'm a little unsure how will it work. So I don't want to make any guesses with that. But let's see. We'll have to wait and see. But it is a forward step because it's going in the right direction. And you will see digital currencies. You will see digital rupees as the time goes on. Maybe we are accelerating this jump or this step, and we'll have to see how to manage it.
You were just telling me about how constrained the finance minister is, which in terms of revenues has been a difficult year despite good tax collections. Now, given that, one would have expected that she would have put the pedal down hard on disinvestment, on asset monetization. You know, these are established plans, but we saw 65,000 crore, very, very tepid target for next year. We heard nothing on the asset monetization plan. Are you surprised or disappointed that the government is going so easy on capital receipts or finding resources to raise capital to put more at work on the Capex front?
Well, she did say that we managed to do Air India and the steel company, Nilachal Steel, today. And we will do the LIC IPO this year, which is March. And so if she's able to do that, I think it'll be very useful for the government to get that extra money from the LIC IPO. So I agree. I was a bit disappointed. She was absolutely quiet about asset monetization, or the public sector banks have not done well on the market because she didn't say anything about merging public sector banks and what her plans are. But it is, and the target this year, the target was 175,000 crores, and you hardly scratched the surface so far, unless you do the LIC divestment. So I guess since the results have not been visible during this year. She didn't want to talk about it until she shows that she's able to monetize certain assets. Yes, it was a bit disappointment, but I think you will see her. You will see a greater emphasis by the government and a push to monetize more of government assets and disinvestment also.
You know about these things, Deepak. I want to ask you to say candidly, what do you think is going on with this process? Because, last year hopes were raised because she said we will experiment with 2 public sector banks first. That never happened. There was no noise about it. And this year we are down to 65,000 crores. BPCL is still dragging its feet. Is it union resistance? Is it the fact that the wrong kind of businesses are being brought to the market? What do you think is the issue out there? Why are we not able to push ahead with this?
I think the biggest concern the government is having is accusation from opposition that you've sold it at a low price. Because price discovery is not that easy in unlisted companies or in assets that are not listed. But she mentioned BPCL and Shipping Corporation should IDBI Bank. These 3 are listed companies, and you will see some progress of these 3 companies in the coming year. I'm quite convinced of that. Now, bank mergers have been stalled because the existing mergers that have taken place, I don't know how well they have worked. And, because it takes time for integration of management, integration of the union. So probably it is work in process. And but land assets with the government, the railways, the defense, they have massive amount of land all over the country. That has to be monetized. And liquidity is there in the market to fund these. Because, housing and commercial real estate has really taken off well in the last year or so. So there is an opportunity for government to sell surplus land and monetize land. But I don't think they've been able to do that. Again, not because of union issues, but more because of, selling it at a throwaway price and, selling government silver at a throwaway price. So this is their concern. How do you come to a decent valuation which is acceptable by the opposition, by everyone, that this is a decent price to sell an asset which is not listed? So I think the first step they will do is try and sell the listed companies like Shipping Corporation and IDBI Bank, as I said, BPCL, which are all listed.
How do you see the banking system this year, Deepak, in the light of this budget? Do you think that a new credit cycle is on its way? Because so far we haven't seen a major pickup in credit. And there is one fear among many quarters that because incomes have been hit so badly at the lower end of the pyramid, you could actually see the start of delinquencies happening at the retail level. Now, given the perch that you observe these things from, do you think there is a real threat of that? Or do you think this is an overblown fear?
No, there has been, massive deleveraging by the corporate sector. And that's one of the reasons why the credit growth is muted and is tepid. Because many companies have, because of good cash flows and because of capital expansion plans are not yet finalized or capacity utilization is not yet reached, deleveraging of corporates have taken place in a massive way. And the other issue is many AAA, AA companies have been able to raise money from international markets, from the bond markets. Even junk bond companies with very low credit rating have been able to mobilize resources. And since they were so economic, overseas money was so reasonably priced, many companies have taken a step to borrow internationally. So yes, there has been a disappointment on credit offtake by all public sector, private sector banks. The retail credit has grown significantly. And the retail credit has grown both consumer credit, personal loans and mortgage loans. The mortgage loans growth has been phenomenal this year, despite COVID, despite lockdown. And the unsold inventory has shrunk, which the developers were carrying over the last 2 years, where we said that there's a massive problem of unsold inventory. So that numbers have come down And we see an uptake from our loan applications. The loan applications have shot through during this year. And so retail loans have taken off, corporate loans, deleveraging has happened. So it appears that there is no growth in corporate offtake.
Right. My last question to you, Deepak, before I let you go. You refer to the bond market. Given that the government's issuance is going to be very large this time around and there is already upward pressure on yields, do you think the government missed a trick by not doing the short-term capital gains tax waiver on bonds, which would have led to inclusion of India in the global bond indices? There was an expectation in many quarters that it would happen this time around. Are you disappointed that it did not happen? It did not come through?
No, if Indian bonds are included in the global index, there's a number which is bandied around that India will get $25 billion inflow into the country. Now we have to make that happen. And I personally feel they will do something during the year relating to the GIFT City. And, the GIFT City has got a huge impetus on education and other items. So I'm sure they'll do something on the global bond, how to make Indian bonds as part. I must also say, Udayan, that although we've seen a $3 billion sell-off in January of foreign portfolio investors, many investors, as we have a large foreign holding, almost over 70% in HDFC, many foreign shareholders who are our shareholders are saying that it's about time India is included in the global index. Today, India gets money from emerging market funds and from Asia funds. But we are not yet a part of the global markets, equity markets. So global equity funds will have to have 1%, 2%, 5% in Indian equity markets, which will give a fillip to our equity markets. And this is going to happen sooner than we think. Because, Chinese companies which were part of global index and people were buying in global funds, Chinese stocks, they have been disappointed with that. And with the liquidity and with good systems of entry and exit in listed investments, I'm sure this is going to happen faster than we all think.
Okay, Deepak, thank you very much for your time. Pleasure talking to you as always. Thanks for joining in today. And Jayant Sinha, Chairman of the Parliamentary Standing Committee on Finance and former Minister of State of Finance for Finance, joins me now. Mr. Sinha, thanks for joining in. I was just talking to Subhash Garg, and his point is that while optically it looks like we've got a 2 lakh crore boost on Capex, 5.5 lakh crores going up to 7.5 lakh crores, that includes things like a 1 lakh crore interest-free loan to state governments who are constrained by their own fiscal deficits at 4% and therefore should not be construed as additional Capex support. Would you concur with that?
No, I would not concur with that, Udayan, because the reality is that the terms under which these loans have been extended are very, very concessional. They're 50-year loans at a very low interest rate, and they're designed to support the priorities of the state governments as well as those of the national government. And they will provide a very strong incentive for state governments to invest in Capex and in projects. And the whole idea behind this budget is to drive job creation through kickstarting further the virtuous growth cycle related to investment. So you'll see throughout the budget, there are all kinds of incentives to drive investment. And this is another one which is very important.
Which brings us to the issue of execution, because in past years, including this year, we've had outlays on Capex at the center and the state level. But by the end of the year, we find a lot of cash still residing in RBI's coffers because the money has not been spent. Do you think this year will be any different in terms of the government being able to spend the money? Because without just earmarking it does not help. You have to spend the entire amount for it to have that multiplier effect you're talking about.
Udayan, this year, as you can see in the revised estimates, the Capex expenditure is actually higher than was originally projected in the budget estimates. So it's not as if the government cannot spend the money. The government can absolutely spend the money. And there are many areas where Capex is sorely needed. For example, in terms of highways, where we've spent 65,000 crores this year, this financial year. And next year, we're going to double that to 1.3 lakh crores. So this money is being spent. We look at Pradhan Mantri Awas Yojana, again, the money is being spent. And once the money flows out as Capex, it helps, of course, larger companies, but in particular, it helps MSMEs, particularly if this is government money coming, because that has security of payments. And as the Honorable Finance Minister announced in the budget today, government payments will be paid within 10 days. So it really gets, the lifeblood of the economy really pumping hard and enables, very fast growth as a result of that.
One understands what the government is trying to do by trying to create jobs, invest in infrastructure. But at the same time, all of us agree that the bottom end of the pyramid is looking very, very difficult. And in that sense, one would have expected that some of the welfare schemes continue, the schemes which get money into the hands of people at the bottom end, that would continue. In moving money out of revenue expenditure and into capital expenditure, do you think that the government is being too hasty? Because income repair is also important after 2 years of the kind of distress that one has seen. But we are not seeing that in this current budget.
Udayan, I'll have to disagree with that analysis, because remember that during the COVID pandemic, we have had a very elevated level of welfare spending. 80 crore people have been getting virtually free food grains for 19 months. We have spent some 2.6 lakh crores on providing those food grains. Now, that's going to come down a little bit, but other subsidies like fertilizer subsidies, Kisan Samman Nidhi, which is the direct payment to farmers, fertilizer subsidy, all of these are going to continue. So while we are not going to have spending quite as high as it was during the COVID pandemic, it's still going to be welfare spending at very, very high levels. And when this happens, you are pumping consumption resources into the economy, into the hands of people who are most capable of spending it and who most need to spend it. So to say that there's not enough welfare spending happening, that support is being withdrawn as far as welfare is concerned, is absolutely the wrong analysis. As I said, during the COVID pandemic, this was at very elevated levels, and it's still going to be at very high levels going forward.
Is it the government's assessment then that the COVID-related scarring has abated? Because looking at the budget, it feels that way, that from those elevated levels of welfare spending or support, the government is coming back, dialing back a bit. Is it the government's assessment that the worst is over and those people don't need as much support as last year?
It's not just the government's analysis here, Udayan. I think the world is realizing that we're getting, God willing, towards the end of this pandemic. And because our vaccination levels are as high as they are, 90% of people have got one dose, 70% of people have got two doses, booster shots are being rolled out. We have many good therapeutic alternatives to deal with the COVID pandemic. We are now getting to the point where we can resume normal activity, resume normal economic activity, and everybody wants to get back to work. Everybody wants to get back to a normal life. And as a result of that, normal economic activity will start, and the level of elevated welfare spending will not need to be as high because normal economic activity is being restored.
The other criticism which is probably making it difficult for the Reserve Bank of India with its gross market borrowing program of 14.95 lakh crores, net borrowing program of more than 11 lakh crores. Already today we have seen the bond market reacting with yields going up. Do you think this budget in a sense could be inflationary and could lead to yields moving up in the system, which is not very desirable?
I actually think the budget is going to be disinflationary, Udayan, because of the tremendous push that we are making as far as infrastructure is concerned and as far as manufacturing is concerned. There's a huge investment on the supply side. So a lot of the supply side bottlenecks that we're talking about, the supply chain issues that we're talking about, I think we'll be able to address those quite well through the steps that have been taken in the budget. It is entirely true that when you run budget deficits at the level that we're running at right now, at 6.8%, 6.9%, now 6.4%, obviously there will be pressure in terms of borrowings. That's a given, and that's true for all governments in the world because we are going through a once-in-a-century pandemic that is going to require elevated levels of borrowing. But we have a fiscal glide path. We are bringing it down, as the Honorable Finance Minister has said, down to 4%, and gradually all of these things will get sorted out. But the most important thing, Udayan, and I will re-emphasize that, the most important thing is we have to restore strong medium-term growth. We have to grow at 7-8% in the medium term. And the best way of doing that is through investments. And that's what this budget is emphasizing. It's being very fiscally prudent, very conservative, and it's emphasizing investments with high multiplier effects on the economy that will really lead to fast and robust growth going forward.
Well, one area which has surprised a lot of people is the scaling down of the disinvestment target, Mr. Sinha, because, we are at 65,000 crores, down from 1,75,000 crores last year, which was not met, of course. Now, one way to look at it is that market conditions are difficult, government is not able to push through disinvestments, and therefore it's kept a conservative estimate. The other way to look at it could be that there might be a rethink, that the government is saying we probably don't want to go so aggressive on privatization any longer. So is there a fear of that, or what could explain this very diluted target for the current year?
The main reason I think why the numbers have come down is because we don't know yet exactly what valuation LIC will go out at. The expectation, of course, is, as the Honorable Finance Minister said, that LIC will be transacted in this financial year. That will result in some revenue accrual. And then in the next financial year, once LIC is through, we have a few other opportunities. We have BPCL and so on, but we don't know exactly what valuation that they will get in the markets. And therefore, it's better and more prudent to be conservative with your disinvestment numbers, which is what I think these estimates reflect.
Okay, before I get Kiran Mazumdar-Shaw into this discussion to respond to some of what you're saying, one last question. We were speaking about cryptocurrencies just a few days ago on this channel, you and I. While the bill has not come through, we've got a 30% taxation, which is, raised the hackles of a lot of people who invest and trade in that market. They're saying it's unfair and it should be much lower, in line with equity taxation. What are your thoughts on the level at which it has been pegged, the 1% TDS? It almost seems like the government is saying, okay, we'll allow it, but we are not encouraging it. There seems to be that kind of an element to the taxation which has been proposed.
Well, as far as digital assets are concerned, there were two very substantial steps that were undertaken. One was the announcement of the fact that RBI is going to be coming out with a digital rupee with a guaranteed value, which of course the RBI can provide. And the other is that we've created a taxation framework so that crypto assets can be brought into the tax net, that they will be done in a very transparent way. They'll be assessed. The 1% TDS is there so that we can assess what is the price that you bought it for, what is the price that you sold it for. And so we are creating a legal and transparent framework for bringing these assets into the taxation framework. And by doing so, we are establishing predictability and stability as far as crypto assets are concerned. And we will see how this progresses, number one. And number two, we will also see globally what is the kind of regulatory regime that gets created for crypto assets. And on the basis of that, I'm sure there'll be further fine-tuning of this entire taxation framework.
Thank you for your time, Mr. Sinha. I appreciate you joining in on a very busy day for you, surely. Thank you. Kiran Mazumdar-Shaw has also joined in. Kiran, I expect you've been listening in to what Jayant Sinha has been saying, and his contention is you're not looking at the budget in the right way, because we are scaling back a little bit, but we are not entirely abandoning the welfare aspects. But, scheme after scheme, the government seems to be lowering its outlay for 2023. Do you think more could have been done on the services side, on the MSME side, which has been hurting on the income front?
So Udayan, first and foremost, I think I'd like to start by saying that it's very commendable that, the government has not indulged in populist measures, because that is one thing they ought to have done given the elections and what have you. And I think the way I look at it is that the finance minister and the ministry has been very prudent in terms of what needs to be done at a time like this, when, we can't really assume that the worst is behind us. So at this point in time, I think we are back to 2019 levels of GDP growth. Of course, as I said, she's cautiously optimistic in the sense that she's laid out a roadmap which is very focused on the future, on the $5 trillion economy, And she's laid out, if I may say so, a very digitally enabled roadmap where she's focusing on digital health, digital education, a digital economy, so to speak. So, and I think the government has decided to invest in that digital economy to make ease of doing business a lot better. So sentiments are very positive from
that
the
point is
economic
taken.
growth.
My question is specifically about the demand side of the economy, because you know, if incomes hurt, if jobs are not there, then you sometimes need to do something.
I agree with you that they have missed an opportunity for at least addressing some of the pain points that the the informal sector and the MSMEs and the services sectors are facing right now. Because certainly, I don't think anyone can deny that they've borne the worst of the pandemic impact. And I think, I was expecting the finance minister to at least talk about some relief in terms of allowances, at least for housing loans, for healthcare expenditure. But I don't think this is the way the government has thought about it. I think the government wants to open up the economy, revive the economy, get jobs back into this sector through, of course, as was being discussed, the infrastructure projects, according to me, and you rightly observed it, is not going to happen immediately. There is going to be a lag in terms of implementing and spending all this money. But having said that, I am a little optimistic because I think if you open up the economy fast, now that we are fairly well vaccinated, then you're likely to be able to, brush off the kind of criticism that you're having in terms of reducing welfare.
My follow-up question to that, Kiran, is what happens to demand in the second half of the year? I mean, there's one view that because of the scarring at the bottom end of the pyramid, which we have not addressed in this budget adequately maybe, but we could see consumption demand start to get weaker. Do you think that is a legitimate fear, that we could see some waning of demand in the second half of this calendar?
No, I think that is a legitimate concern, because I think that unless we get the economy moving at all levels, right now it's the large formal sector that's driving growth. I mean, what you're seeing today, whether it's GST collections, whether it's the strong growth that we are seeing, it's driven by the large and formal sector. So I do believe that if you don't start, seeing the kind of inclusion of the other sectors, especially services, I think services is what is going to determine consumption. And I think if you bring back the economy, open up the economy, I for one believe the services sector is going to rebound. But any further lockdowns or delays, and this is all at a state level, if you remember. So unless we get the economy back in full flow, you have these legitimate concerns.
Kiran, thank you very much for your time. We'll let you go today. Very nice of you to join in today. But we've got more guests joining in to continue this analysis. We've got Naina Lal Kidwai, Ashok Wadhwa, and Rajiv Lal also joining in now. Ladies and gentlemen, thank you very much for joining in. Naina, let me start with you. As a former banker, I want to ask you about this digital rupee, because everybody's quite excited that the RBI will have a digital rupee. But are you clear how it will work? Will it be like almost legal tender, a currency that you can transact with?
I'm sure that's the intention, but we will be one of the first countries to take this forward, and as it should be, because we're really masters at everything digital. I would hope that we lead the charge, but it's very hard to understand by when it'll get implemented and by when it works as legal tender. And for that, we'll have to look at RBI. The finance minister was being pushed on this by some at the press conference she held, and she basically deferred to RBI. So we'll have to hear more about it. I think the relevant aspect here is that there is recognition that there is cryptocurrency. India has been slow to integrate globally into the cryptocurrency madness, if one might call it that. And I think the fact that it exists, that it will be taxed, are at least a step in the right direction, even as the stakeholder conversations happen on that. If I could just come in on some of the discussion on consumption and demand, and I share the concern there. Enriga's down 25%. infrastructure projects, take 18 months to 2 years to actually play out. So what happens in the immediate term? And I think the good news here is in this one of the spaces I work in, which is sanitation and water, is there's a 67,000 plus budget, which has been set up for this year, as in the year 23. And that is almost 34% above what is already a large budget for the current year. And there's UNICEF study which showed that from 2014 to 2019, the Swachh Bharat mission, 75.5 lakh new jobs were created. So there's external endorsement that the delivery of public goods and expenditure by government on these programs does create jobs. And I'm really glad to see that that commitment is there, and hopefully it replaces what we're seeing as a decline in Riga, and also maybe till we have catch up from the infrastructure sector. And within infrastructure, while we certainly need the roads and ports and big infrastructure, I'm hoping there's some amount that is committed to sewage treatment facilities, etc., which indeed might be bigger employers. So to look at all the programs at some stage through the lens of job creation, which in turn could lead to greater demand, particularly in rural India, which has been flagging. Green jobs too, by the way. That's something
Excellent
the Prime Minister just mentioned.
Excellent point, Naina. And I just want to get Rajiv Lal to join in this discussion about infrastructure creating jobs. Rajiv, you've been in the sector for so many decades. Now, Naina just spoke about the fact that infrastructure jobs take 18 to 24 months to materialize. That's where the government is putting so much emphasis. What is your sense of the kind of infrastructure investment which this jump in Capex will entail, and how many jobs or what kind of jobs it will end up creating?
See, if you recall the infrastructure boom in the second half of the first decade, from 2005 to 2010, that boom led to significant job creation, which came from the construction industry. So there's an absolute boom in the construction industry, which was led by infrastructure investment. At that time, infrastructure investment was led by the private sector. This time, what they're trying to do is to lead the Capex cycle with public investment. So the jobs will be created through the construction industry. It is true that it will take some time. So what we have to watch very carefully is the execution capability of government to get this infrastructure public investment plan up and running. And what is actually critical about this plan, if you look into a little bit into the detail, a significant chunk has to come from spending through the states. And the states have constraints on execution capability and project management. So getting that machine up and running at the pace at which they want is going to be absolutely key for creating the jobs we need to be creating. But conceptually, public investment of this nature is the sustainable way of creating, hopefully, a virtuous cycle of growth. So public investment creates jobs in the construction industry, that in turn creates demand, that then kickstarts private investment, and then the cycle goes on from there. So that is the hope and bet, but we don't know yet how well it will play out.
Ashok, I was trying to talk to you earlier in the day, but could not get through to you. Let me start by asking you about this crypto taxation, because it seems to have really kicked up quite a fuss, this 30% tax, the 1% TDS. Is it your view that it's penal, or do you think it's par for the course?
I think it's par for the course. I mean, if F&O transactions for the longest time have been treated as speculative trading and have been treated differently under law, nobody's objected to it. People have learned to pay tax on that. Why should cryptocurrencies and any gains made on cryptocurrency be treated differently? Perhaps the younger generation is unhappy with this because, many of us who were born post the birth of crypto, or who were born much before the birth of crypto, don't really deal with it. But let's think about it logically, right? they have said that the cost of acquisition will be allowed as a deduction. So it's not as if they're taxing you on gross revenue, they're taxing you on your gain. And if transfer of art and transfer of personal belongings and transfer of shares attracts gain, then why shouldn't crypto attract gains? In addition, they have applied a 1% TDS because they're jolly well aware that it will be a while before the regulatory framework is created to be able to track these transactions and create an audit trail. So by creating a TDS, they have made sure that there is reporting and the onus is on the payer. And therefore, the payer will always take a conservative view, deduct the tax, and create the audit trail. So honestly, I mean, one can argue and say, is 30% the right rate? And somebody will say, but, am I not paying 45% tax if I sell an unlisted share in a company in less than 2 years? Honestly, I think it's par for the course.
Right. Well, I was just asking Naina about the digital rupee, and we are all looking to the RBI to see what shape and form it takes. But being an observer of how these things work, what is your expectation of what the digital rupee will be?
I mean, my own view is, I think we need to look at this thing, as Naina said, first positively. Even while the cryptocurrency law is being developed, to me, the preamble has already been set. And the preamble is that India is going to be amongst the first countries. We've been first in many other respects in the digitization process. India is going to be amongst the first countries that is hopefully going to introduce and legitimize this concept of cryptocurrency. I think the finance minister also said that it's going to be on the blockchain basis. Honestly, at this point of time, and perhaps again, lack of knowledge could be one reason for that. I cannot exactly fathom on what sort of currency this would be, how it would get traded, what sort of exchange will be needed for that, and more important, what sort of framework will be needed to make sure that something which is all on the cloud or in digital format can also be traced, collated, accepted, and transacted. So honestly, it's beyond my qualification, I have to say that. Maybe Rajiv probably has a better understanding of it than I have.
Let's leave it to a break. We'll come back and continue our discussion. Many more experts waiting to join us. We shall be back in a minute.